Lucid Motors LCID has shown a slight but noticeable upward movement today, currently sitting at a 1.72% increase. The stock is trading at approximately $2.31, with a low of $2.31 and a high touching around $2.46. Now, that may not sound like a huge swing, but considering the chaotic and uncertain climate in the market today, this movement is quite intriguing. It's not every day you see such resilience amid global tension and unsettling economic signals. Let's back up a bit and talk about the broader context influencing market behavior right now, because it's been a roller coaster ride since last night. Overnight trading sessions and the pre-market hours were dominated by anxiety and fear. And that fear wasn't just abstract investor sentiment, it had very real roots in international politics. Specifically, China announced a retaliatory measure against the U.S., implementing an 84% levy on certain imports. That's a massive tariff, and it sent shockwaves across global markets. Investors immediately began bracing for a worsening trade war scenario, and the initial sentiment heading into the day was extremely bearish. However, markets are often influenced not just by events, but by powerful voices and public statements. In this case, former President Donald Trump posted on Truth Social, providing a very different tone. He described the current environment as a great opportunity to buy. While he referenced DJT Trump Media and Technology Group, many interpreted his comment as a broader endorsement of buying the dip across the market. Trump also encouraged people to remain calm, assuring the public that everything would work out fine and the United States would emerge stronger, bigger, and better than ever before. He also made statements in support of fixing long-standing trade issues and tariffs, calling it a necessary adjustment for future economic prosperity. Interestingly, at nearly the same time, J.P. Morgan analysts released a report increasing the likelihood of a recession from 40% to 60%. This shift was largely attributed to the new tariffs being introduced under Trump's influence, further fueling the tension in investor circles. So, on one hand, you have a major political figure boosting market sentiment, and on the other, institutional financial experts issuing a stark warning. This is the kind of market moment that feels historic, like something we'll all look back on as a rare and volatile period. It's a combination of unpredictable politics, macroeconomic uncertainty, and investor psychology colliding all at once. For those involved in short-term trading, whether you're a day trader or a swing trader, these conditions are incredibly challenging. Predicting market direction with any certainty right now feels next to impossible. However, for long-term investors who believe in the fundamentals of certain companies, now might be an excellent time to dollar-cost average into positions. Trying to time the absolute bottom in an environment like this is nearly impossible, and more often than not, it leads to stress and poor decisions. Now let's bring the focus back to Lucid. Despite the larger market chaos, there has been a healthy amount of volume flowing into LCID today. Interestingly though, there hasn't been any major speculative news driving this. However, there was an important update that came in after hours yesterday. The company officially closed its convertible note offering and shared some new details regarding the terms. Here's the big takeaway. The conversion price has been set at $4.80 per share. This relates to what's known as a capped call feature in the convertible note deal. Initially, when this convertible note was announced, many investors, including myself, were skeptical. Convertible debt can often lead to dilution of shareholder value. But with the inclusion of the capped call, Lucid has taken a step to protect existing investors from excessive dilution. That's a significant positive. But it wasn't cheap. Lucid spent roughly $118.3 million of the net proceeds out of a total of $1.08 billion to secure that capped call. That's a sizable investment, but one that could be seen as a strategic move to maintain investor confidence and limit long-term damage to the stock's value. That said, Lucid still has a lot of work to do. They need to sharpen their operations and execute consistently if they want to avoid falling deeper into investor skepticism. With the conversion price set at $4.80, and considering where the stock is currently trading, One could argue that Lucid management still sees upside potential over the next several years. This is a 2030 note, so there's a long-term vision here. On the short-selling side, we're witnessing some fascinating behavior. Short interest remains extremely high. 24.72% of Lucid's free float is being shorted. That translates to approximately 300.38 million shares. The short interest score, which reflects the likelihood of a short squeeze, currently sits at 77.06. The higher the score, the more likely a squeeze could happen under the right conditions. Short sellers seem to be confused. Over the past few days, they've been aggressively increasing their positions, adding millions of short shares. But today, that increase slowed down significantly. Only around 72,000 new short positions were added. This might suggest hesitation or uncertainty among shorts, especially with the stock holding steady or moving up despite the broader noise. Options activity tells an interesting story as well. So far today, there have been around 154,000 call options traded versus only 36,000 put options. However, about 46% of all options traded are bearish in nature, showing that while there is bullish interest, a large portion of traders are still hedging or betting against the stock. On the secondary market, we've observed a few high-value transactions over $100,000, each, all of which were sells. This follows a similar trend to yesterday and could imply that institutional investors are cautious or taking profits, while retail sentiment tries to stay optimistic. Interestingly, the dark pool data presents a slightly more bullish case. There's been a noticeable uptick in dark pool activity, including some larger buy orders. This could suggest that while public-facing institutional activity appears bearish, there may be quiet accumulation happening behind the scenes. Looking ahead at the options chain, the most traded call strikes for today and the coming week are at $2.50 and $3. This implies that some traders are expecting a near-term recovery. On the flip side, the bears are heavily betting that the stock will fall below $2 in the near future. It's a clear tug-of-war. At the time of this recording, Lucid is trading around $2.38 and is bouncing between key technical levels. The first major support lies at $2.11, which could serve as a solid base if the stock pulls back. Resistance levels to watch are $2.55 and $2.69. If the stock breaks past those levels with strong volume, it could indicate a more meaningful breakout and possibly trigger short covering. We haven't seen any new analyst ratings or revisions to earnings or revenue forecasts today. The last few updates came earlier in the week. With Q1 now wrapped up, investors are carefully watching for any analyst reaction or changes, especially as the impact of tariffs and global trade policies begin to ripple through corporate earnings. Later today, we are expecting the release of the FOMC meeting minutes. While these releases typically cause some movement in the market, this particular one might not have much of an effect. Since the time of that meeting, a lot has happened globally, most notably the tariff escalations. Unless there's an unexpected comment in the minutes, it's unlikely to influence the market much at this point. From a technical standpoint, Lucid is currently pressing against its 50-day moving average, which sits at $2.53. This level has acted like a ceiling, but if the stock can close above it with conviction, we might see significant upside momentum. Once that resistance is cleared, bulls could very well take control, at least in the short term. So, to wrap this up, considering the wild ride in the market, Lucid is holding its ground better than some may have expected. If you've been accumulating during the dip, give yourself a pat on the back. If you've been selling, I'd love to hear what influenced that decision. What's your outlook? Are you leaning more toward the bearish analysts forecasting a 1987 style market crash? Or do you think this is a classic buy the fear moment, and we've already bottomed out? Drop your thoughts in the comments below. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.